So in today's episode, we have Keith Neumeyer. He is one of the most successful mining executives. Most people know him for silver. They know him as the CEO of First Majestic Silver, but he's also the chairman of a gold company as well that, quite frankly, a lot of people don't know quite as much about. And they have some amazing details that we'll be discussing later in today's episode. And that's First Mining Gold. So give us your price predictions for gold right there down below. Normally, Keith is always talking about silver. We're going to be talking a bit about gold today in the macro environment for gold. So give us your gold price prediction for 2021 right there down below in the comments. Make sure you hit the like button on this video. And it's good to see you, Keith.
Great seeing you again as well, Jake. It's been a while.
So you've been talking, one of the reasons that you were kind of one of the first mining executives I became a fan of when I started watching all the channels, Daniela's and Palisades Gold, and just doing my own studies. And you were always talking about you couldn't believe that governments were doing what they were doing, the deficits getting out of control, and that there was eventually going to be ramifications for that. And now it seems like even somebody that has no idea about macroeconomics, they don't care about the financial system, but they can't ignore the fact that prices for everything seem to be going up and deficits seem to only be beginning. The economy's been hollowed out in many places in the labor departments. Give us your take on first of all, these type of things that you've been talking about for many years that seem to truly be manifesting themselves now.
Well, definitely the market's cyclical, and I've been a bull on metals. Well, I've been in the mining section for 35 years, so obviously I must have some biases in me because I think mining is in my blood. I gather, and metals are in my blood, and whether it's copper, silver, gold, or what have you, these are critical commodities that we need as a human race to do all the things that we do. But you've got on top of that, you've got this enormous demand, for all these metals, particularly with the new Green Deal and electrifying the planet, getting away from oil and gas and so on. But you've got the governments just printing unusual amounts of money, debasing their own currencies and just piling on debts after debt after debt. And really, it's now almost acceptable for governments to run deficits. And when I was much younger, governments would always try to have a balanced budget, and and possibly even have a surplus, if possible, for those rainy days when things turned and they needed to rely on their treasury, just to finance the cyclicality of the economy. But today, that's not the case. They don't care about debts, and it seems to be irrelevant to them and often even the market. But what that does do, it puts this inflationary trade very much at the forefront. The last couple of days, of course, we've seen copper and silver get hit, but that's a totally different discussion. Today is triple witching day for those people who don't know. It's option expiry, so you often see these huge gyrations right into an option expiry, particularly one which is like today, which is triple digit or probably triple witching. So, but nevertheless, I think you have to have metals in your portfolio just to survive this trend that's continuing and doesn't seem to go. It's not going to go backwards.
Yes, so it's really incredible to actually see these things happening now, and everyone's starting to notice the price of inflation, or I guess the devaluation of currency. And then obviously this leads many to gold, the subject we discuss a lot on the channel. And before I get into what you believe is the upside potential of gold, the upside potential of silver, one of the things that I've learned a lot from getting to know you more is, like you said, mining's in your blood. You've been in this industry forever. You're so seasoned in the bull markets and the volatility of gold and silver. And for many people, the macroeconomic factors, they seem to be suggesting that the price should be a lot higher. Then you said there was another sell-off, and then you talked a little bit about options expiration. First of all, when you see that type of sell-off that we've had recently, is this something that essentially now you've come to expect during an options expiration?
Very much so, and it is discouraging. I can imagine, for investors, in your age group, who are, just watching or coming into the sector for the first time, um, look at these big gyrations, and they get, concerned and possibly even discouraged, and often get shaken out at the wrong time, and which is really unfortunate. But I've been there, I've seen it so many times, and you just have to have a core position, always invested in the metal sector, in my opinion, anyways. And that's going to be different for everyone. It depends on your own, needs or your own risk tolerances, because obviously some people, have less risk tolerances than other, and also where you want to be in the space. Like if you want to, for example, invest in gold, do you buy physical gold, or do you buy a producer, or do you buy a developer, or do you buy an exploration company? These are all different risks. The least risk, of course, would just be buying physical gold and putting it in a safe somewhere, and that's it. But if you start getting into the equity markets, then of course, just like any stock, stocks do gyrate, just like Apple does and Tesla, you name it. Any high tech stock just does what. But the miners tend to be quite a lot more volatile, and you just have to have that kind of almost like turning off your screen, just ignoring your portfolio every once in a while, because it's days like the last couple of days that unfortunately just shake a lot of people out. And I was buying stock yesterday, well, actually the last couple of days. I had some lowball bids in some of my favorite names, and I got filled at quite low prices. I'm surprised that some of these stocks even traded where they traded yesterday, but I was happy buyer. And today the stocks are up today, so obviously it was a good thing to do. But you just have to have that diligence, when you're investing.
So that's something you've been talking a lot about, when you and I have been interacting. And what would you feel, if anything else, is important for someone investing that's sick of not only the volatility of it, but it's either making them think, this isn't the right place, or there's no more upside for gold and silver? What's your thoughts on the upside moving forward, considering it's been a frustrating trade as of late?
Yeah, well, you have to trade your position, and that's one thing people forget to do. And I'm very disciplined. So if I have, I own quite a large portfolio of variety of different mining companies, and whether they're producers, developers, or exploration companies, I own all of them, and I know what the risks are, or at least I try to understand the risks as best as I can. And if I'm I take on relatively large positions, and I know often what many people probably can't, but let's say you have $10,000 to invest, and you found a great company, ABC Mining Company, and you should put, in my view, anyways, over a space of a month or two, watch that stock and buy $2,500 at a time, over a 4 to 6 week time frame. So maybe every week you buy another 2,500. Even do it over 5 trades, $2,000 each over a 5-week period. Every week spend $2,000. That way, you hope to have a reasonable price, because you have to understand, and Rick Rule says this all the time, and I know you interview him frequently, is that you have to be prepared when you buy a mining stock to be down 50% from the first purchase. And you have to, because you're always going to be wrong. Don't ever expect you're going to buy a stock and it's going to go up the next day. Always expect it's going to go down. So you spread out your $10,000 over a multi-week time frame, and you wait, and you watch the company, you read the news releases, make sure, and you have to check your portfolio to make sure you're right, because you could have made the wrong investment. So as long as the fundamentals continue, and you've got access to the company, phone the company up, talk to them, and so on and so forth. And then when the stock does start to move, When I buy a mining stock, I expect to make a minimum of 300% on my investment. I'm not going to buy, a mining stock for a 50% increase. It's a waste of my time and energy. But right when it hits 300%, and it might take a year and sometimes longer, I'll sell 25% of my position right away. So I basically got all my money out of the investment at that point. And then it goes to 400%. I'll do another 25%, another 500%. I'll be out of the stock by that point. By the time it hits 500% gain, I'll be out. And I've got many examples of that. And often, the stock will continue to move, and it might go up 1,000%. But I've been long gone because I'm disciplined. I'm not waiting for 1,000% move. And I'll just roll that money over into my next favorite stock that I might be buying, or a new name that I might be buying.
So let's talk about gold. So people know you as really more silver. You're CEO of First Majestic, and you've done so many interviews and content around silver, but you're also the chairman of First Mining Gold. What's your outlook on gold? Is there more upside, and why do you think gold has upside, and why do you think the gold stocks are interesting versus what you're known most for being silver?
Yeah, look, I came from a copper company in the 90s. I put together a copper company in 1992, and it's a very successful copper company today. And I put together First Majestic Silver in 2002. Of course, it's been quite successful as well. And I put together First Mining Gold in 2015. Because those are my favorite metals: copper, silver, and gold. Gold is unique because it's really a currency. Gold is the granddaddy of all currencies, and I think everyone should have a portion of gold in their portfolio, whatever that means for people, but they should have some, and it's there just as a preservation of wealth. You don't really buy gold, physical gold, to make a profit. You put your profits from the stock market into physical gold, and that's what I do. But when it comes to silver or copper, these are industrial metals. These are industrial commodities, and they go through cyclicality. And I think we're at the beginning of a new bull market, and it's very much inflation driven. Interestingly enough, now with COVID and all the supply chains that have been broken around the world, we have actually a supply problem. Because governments don't want to trade anymore. It's harder to get things from Europe. It's harder to get things shipped over from Asia. It's just you go try to buy yourself some furniture for your home. You're going to be waiting months for it, or try to go buy some tiles for your floor. It's just crazy the wait times on things today. So what happens? Price goes up because people don't want to wait, so they're willing to pay more. So what does that create? That creates manufacturing locally versus importing things from around the world. So that creates inflation, and this inflation trade is here for probably a decade. It's going to take. And the last bull market started in 2002, and gold, silver as well. And then what happened there was you probably remember Y2. Well, maybe you don't remember Y2K. You're probably too young. But the 1999-2000 tech bubble, and I remember Y2K quite dearly. And the Nasdaq hit 5,000 in March of 2000, and up from they tripled over a period of a few years. And it took 15 years. Well, actually, over the next 3 years, it corrected by 80%. So it went down below 1,000, which is quite shocking. And it took 15 years for it to get back up to 5,000 again. And during that whole period was when the resource sector took off. So you had copper go from 60 cents to $4. You had silver go from $5 to $50. You had gold go from 250 to 1,900. And that's what we're going to see again. So if you use those same kinds of percentage moves at today's metal prices, you get to see some pretty crazy numbers over the next decade.
Now, some people seem to think that this is transitory or temporary? We have the central bank saying that it's transitory. And so I want to know your thoughts on, you said you think we're in the early stages of maybe a decade long inflation trade. So you don't buy the narrative that this is going to be over in a few months, this inflation?
Not at all. And it's going to be uh, very much supply driven. The commodities just simply aren't there. The miners don't have enough commodities to fill the demand. Um, this even at current demand, forget about future demand. If the United States and the planet wants to re-electrify how we produce energy and consume energy, this is a game changer for metals. We've had a lack of investment in mining for the last decade. We just came out of a very severe bear market that started in 2014 that didn't really end until 2018, 2019, and so the miners are starting to make money again. And we could see it, of course, in the mining stocks, or they've all done quite well. But the mining industry still is really not willing to spend the amount of money necessary to build the mines that are required to meet the new Green Deal, rebuild the electrical grid. And it's going to be quite a long time before the mining sector is willing to do that, because it's a very long process. You have a board of directors, the management teams saying, yes, okay, we're going to build this mine. So first they have to get permits, they got to raise the capital, then they have to start construction, and it's likely 10 years before that mining company can actually start turning a profit, because they've got to repay all their capital that they used to build the thing in the first place. And mining executives just don't have the will to look out 10 years. And then they say, forget it. We're not going to invest that capital. So, the industry knows where, there's copper deposits. We know where there's silver deposits, but, at current metal prices, they don't make sense to develop. And it would take way too long to develop them anyways. So you're likely just going to blow yourself up trying to build one of these big mines, and you may never make a profit, and you could go bankrupt along the way. So it's a big supply problem on all metals.
So, being a metals person, how do you anticipate gold stocks moving versus, say, a copper stock or whatever other type of commodities in an inflationary environment? You've done quite a few rounds of this. You said you've been involved for 35 years. Do you anticipate copper and other commodities that they move first, and then when the mass public finally accepts inflation is here to stay, then you get that quick move in gold following, or does gold move along with it? How do you expect this process to unfold?
Oil is really a good indicator. It often is the first to really go. Gold is often quite close after oil. You need both of those commodities to really move, to really light up the entire commodity sector, and that's what's happening now. So I think oil is going to go through $100 a barrel in the next year or so. And I wouldn't be surprised to see copper go all the way up to $8, even so it's a double from current levels. Silver, I think it's triple digit, so that's 400% higher than where it's currently trading. Gold likely a double, $3,000 gold I think is in the cards. Rickards and others have much higher levels than that, but nevertheless, all these commodities are going to go higher, and hence why. I guess we're talking today.
So, tell me a little bit about First Mining Gold. One of the reasons that we're talking today is because you were saying you've got a really cool, unique opportunity that you guys are doing for investors. So I know it's a little time sensitive. So why don't you share a little bit about First Mining Gold and the unique opportunity?
Yeah, thanks, Jake. Well, First Mining Gold is a company I put together. I first conceptualized it back in 2015, and I ended up acquiring 8 companies and merged them into what became First Mining Gold. And one of those companies was a company called Tamaka, and it owned the Goldland gold project, which has a couple million ounces of gold already drilled. We as a company drilled it even further defined it, and so on. But when I put the company together, I promised the shareholders at the time that if we ever did a joint venture, if we ever sold a project, that the intent was to dividend out something that we received, whether it's cash or shares or what have you. In the case of Goldland, it's right beside a project called Goliath, and it's owned by a company called Treasury Metals. And Treasury Metals tried buying Goldland. I was lucky enough to get it ourselves back in 2015, and now we've decided to do a deal with Treasury Metals, and we get quite a lot of stock in Treasury as well as warrants. Now we're going to be spinning out 23 million shares of Treasury Metals plus 11 million warrants, I believe it is, out to the shareholders of First Mining Gold. So it's pretty exciting. So every shareholder, investor in First Mining Gold will receive a free share of Treasury Metals in their account. And Treasury Metals trades around 90 cents right now, and it calculates out to something like a 10% dividend. That exact calculation, you could actually go on to the website, First Mining Gold's website, and if you have 1,000 shares of First Mining Gold, for example, you can just plug in your shareholding into that calculator, and it'll spit out the exact number of Treasury Metal shares and warrants that you're going to receive somewhere in mid-July.
Oh, I didn't know you guys had a calculator for that. That's cool. So I'll put the link to that right there down below, especially if you want to do that calculation. So essentially what you're saying is you guys have I know it's a little time sensitive. There's a duration of time in which you're saying if you are an investor in First Mining, you're going to get X equivalent percentage shares of Treasury as well.
That's exactly right. And it's all good. The shareholder meeting is at the end of June. So it'll be voted on at that point. But of course, it's going to be approved. Like, why wouldn't it be approved? I'll definitely be voting in favor of it. And then a couple of weeks later, we're planning mid-July to do the actual dividend payment, and it'll just show up in everyone's brokerage account automatically.
Okay, so mid-July for that. Okay, so we'll put the link to that right there down below, and the link to the calculator. I didn't realize you guys had that. That's kind of a cool little gadget. So we got that covered. Unique way to get a position in Treasury Metals through First Mining Gold. Now, let's talk a little bit about, we've talked about gold. We talked about the macro environment. We talked about inflation. You said you're not buying, what they're saying in terms of this being transitory. We've had many of these individuals saying by 2023 they're expecting them to raise interest rates. You're saying you're not really buying in any of this type of stuff. So we've got this interesting type of environment. Then are you expecting moving forward that this moves back into just higher inflation trade through, say, infrastructure bills, that they're going to try to essentially rebuild the failing economy after lockdowns by pumping rounds of infrastructure? Is this how you see it playing out?
Well, I think rates are going lower. This whole talk about raising interest rates in 2023 is just the way the Fed is trying to manipulate the market, as they always do.
What do you think? Why do you think they want to do that? Why is it to keep it down so it doesn't get too into a speculative mania? Like they're talking the market down. If you're saying you think rates are going more negative, why are they doing that, do you think?
Well, because I think they're trying to talk the market down, because it was, you saw the Chinese the day before or 2 days before, I guess it was, say that they're selling a bunch of strategic resources in copper and aluminum and zinc. So the Chinese are obviously concerned about the metal prices, because they're huge consumers of these important metals. And then a couple of days later, the United States comes out with their hawkish language. So it's all manipulated behind the scenes. They uh, you know it's pretty surprising as far as I'm concerned that governments try to do it, but they think we're stupid, I guess. But anyways.
So are they doing this because they don't want the speculative and inflation trade? They just kind of want to talk it down so that all this money printing isn't just making it go straight up forever, and it just kind of instead of a correction, they just kind of talk it down for a few minutes before, as you said, they continue this trajectory. Because that's what I mean. Why are they doing that? So that's an interesting hypothesis you make there.
Yeah, it's part of their management. I don't know. These federal banks think they're gods, and they think that they can manipulate and manage the business cycles. And if they had the same inflation rate every single month, they think they could do it. They just think they can control everything. It doesn't matter. So I don't know why they think that. They have some of the smartest economists working, but they're all PhDs, which is probably the big part of the problem. They don't listen to you or I.
Do you think that they know rates are going lower and they're just saying that, and they know they have? You said you believe they're going lower. Do you think they believe that?
Yeah, I do.
Why do you think they need to go lower?
Well, because with the debt levels with the levels they are, they couldn't afford the rates to go up. The interest on the U.S. debt is I forgot the number. It was about 6 months ago that I read it, but I think they're paying something like $500 billion, or so it could have been $600 billion just in interest at current interest rates. So if interest rates double, you're over $1 trillion just in interest alone, and that's who can afford that?
And then that's when it gets really interesting for gold specifically, right? Is like when people finally realize that the Fed is just balking, they're just saying something, and then they're gonna move it lower. When those interest rates continue to go lower, that's when it gets even more interesting for gold, right?
Absolutely, and that's going to light up, the market. And once the market realizes that in fact the Fed is lying, and whether that's next month or 6 months from now, you never know what makes the turn. But investors will wake up and realize the Fed is just talking out of one side of their mouth, and then that's just going to put a further bid in gold, and it'll likely start going to new highs.
So what's the end game for all this lying? You said when people realize they're lying, they're talking out of the side of their mouth. This is going lower. There's all this debt, inflation's continue. What's the end game for all this that they're doing? Where does it go? What is the result of all of this lying?
Yeah, a lot of people ask that question, and I don't know if anyone really knows. Maybe Lagarde and some very high up people, Soros and Gates, and some of this crowd kind of knows what the end game is. But it's probably a digital currency of some nature. It's probably forcing people to buy certain things and preventing them from buying other things, and taxation, automatic taxation on everything, all transfers of capital, funds, and yeah, they just want control over everything. And unfortunately, it's not great for us as the human race. I'm hoping that people of your age, figure this out, before they get too far down this path, because there is definitely a very totalitarian type movement going on a global basis, whereby we are losing control almost on a daily basis, and the governments just find it necessary, I guess, to control everything. They blame it on climate change, they blame it on COVID, they blame it on whatever they can blame it on that day. They just make up stories to just get more and more control. And it's very unfortunate, and that's why I think you have to have some freedom. And I think, gold offers freedom, well as silver.
So you took me right into my next question, which was going to be about freedom, right? And so, you look at all these things, and it is increasingly obvious that a lot of people are losing more of their freedom, whether it's just their own time freedom, because as things are getting more expensive, they can afford less. Their salary isn't being able to buy them quite as much. By the time they pay their $2,000-3,000 rent and all their things, there's not much money left over at the end of the month. And you're somebody that I guess if you liken what's happening to the rat race, you're someone that's truly broken out of that. I mean, you're one of the most successful and well-respected, not only mining executives, but you yourself in your personal life are also a heavily successful investor in commodities and mining stocks on your own outside of all of your companies. You've built financial freedom, you've done quite well, but you're also aware of the problems and what's happening. And so for someone listening that says, yeah, I'm not too happy about, and I'm a little concerned about what's happening with whether it be government overreach or whether you just talk about the rising cost of lifestyle and inflation. What are the most important things that to essentially be able to buy our freedom right now, to break out of the rat race, to up our game in our life right now? What do you think are important things?
Well, it's a big question. Well, I think you're discovering yourself that maybe relocating yourself is something that may be necessary for certain people, and it's not going to work for everyone, but certain individuals may find it useful. There are a lot of good places to live on the planet. Not all places are like downtown San Francisco. So I would suggest people travel as much as possible and get to know the planet. I visited over 100 countries. I've been on all 7 continents, which is
Wow.
quite interesting. Yeah, and so I know the world fairly well. So I've got a fairly broad view and a fairly broad understanding of our planet and the different governments and how the world kind of operates. And I would suggest people try to do the same thing as much as they can. Get outside their own cities and countries and see what's out there for to offer them. And obviously, trying to be independently, like owning a business. And you talk about this a lot, Jake. Independence is not, in my opinion, anyways, working for other people. I've never been a good employee. I've and that's why I lead a couple of companies. But owning your own business, having some financial freedom, and then travel and having some gold and silver.
So I want to ask you a little bit about travel, but going to 100 countries, working all over the world. But first, talking about business, you said to me before that, you agree that I kind of think right now, especially as we're seeing government moving towards even more and more control over the economy and the in the workforce, having your own means or just even side hustles, your own means of diversifying and controlling your income. Why do you think that's important? And what are the ways, as someone who's been serially successful at starting companies, what do we need to do to start to excel as an entrepreneur?
Yeah, it's some people, I guess, just will never be an entrepreneur because and I've often asked myself this question, is it something inbred or is it something you learn? I still don't know the answer to that question at 61 years old. So but perseverance and stubbornness are, I think, the 2 biggest traits of a successful entrepreneur. Don't let someone knock you off your game. Don't let someone say, "Hey, you're wrong," and then quit. Just keep being keep working on your objective, your goals, set goals, even write them down. As a younger guy, I'd write down goals and I'd focus on those goals every day. I'd wake up and I'd look at the goals, and it's surprising how many of the goals I actually achieved. Some took longer than what I was hoping they took, but I remained stubborn and I persevered. And yeah, you have to do that.
So you were a fan of clearly defining your goals and legitimately writing them down on a piece of paper.
That's right. Mm-hmm.
It's interesting how that, like, I feel like it has this weird mind power where whenever I end up actually writing them down instead of making them in my head, those are the ones I seem to achieve. Have you found that?
Yeah, I would absolutely agree with that because it's more visual, and it's like I'm not very good at remembering people's names for whatever reason, and so
you called me Jeff like 2 minutes ago. No, I'm just joking. You did.
For sure, I didn't do that, but anyways, like I write down the person's name on a piece of paper, and it's surprising how well that works to remember that person's name.
So, 100 countries. You told me, didn't you work in Africa? How many years did you live and work in Africa? It was a while, right?
Well, I never lived in Africa.
Okay,
thank goodness.
You didn't live there.
Yeah, I worked there for 8 years, back and forth, between Canada and Africa. And I in Zimbabwe and Congo and I forget the name of the other country.
So let me ask you, Doug.
Zambia. Sorry.
So you've been all over there. So Doug Casey has been writing his fiction series, which is it's kind of like this very adventurous story of this mining speculator, and you've run businesses all over the world. Tell me either what's one of the more interesting stories that sticks out, or just being to 100 countries, how has that impacted your life, your business, your worldview?
Well, there's so many stories that one day maybe over a beer we can chat for a few hours and talk about stuff. But one of the biggest learning things that quite early in my career is in my early 30s when I put my first company together, First Quantum Minerals, and the fellow that ran that company, he was a white guy, but he was 7'4", I think it was, and born and raised in Zimbabwe. So he lived in predominantly a black country, but he was white, which was quite unique. But he was an engineer, and he had and he was a super well respected guy in the community, and he knew how to run mines in Africa. He was just an expert at running mines, and he was just totally well respected guy. And we had this gate around our first mine that we built. We were actually the investment we made in Zambia was the first investment in 35 years from any foreign company.
Wow.
And this was in 1996. And so we built this gate around this mine, and there was a lineup of people that were always waiting to get a job. And these people would get paid 25 cents an hour. And if there was any problem within the mine, within the gated area, the manager, this fellow, would just basically kick the guy out, and he'd be fired on the spot. Whether it was drinking, whether it was fighting, whether it was whatever the case may be, and they would just get the next guy in line and just bring him in, and he would get a job. And it was really a bit of a wake up call for me that how different it is in North America, where labor there, it's just so cheap, but everyone's willing to work, but the turnover would be quite large. You could have a 20% turnover in your employees over a period of a month, which is pretty high.
Yeah, I was watching Matthew McConaughey in a movie on gold, and it seems like when you go all over the world, from Asia to Mexico to Africa to Canada, it's got to be quite interesting to see all these different mines. So why don't you recap?
That was a good movie.
Yeah, that it was entertaining. I've seen it a couple times. It's a good inspiration too. So why don't you recap here and tell us a little bit about um, to summarize what you got going on with First Mining Gold. We'll link the calculator right there down below where you could check out the approximate percentage of shares that you get in treasury metals as well. Obviously, this is kind of a unique thing. So if someone can wrap their head fully around it, why don't you summarize it again?
Yeah, I should talk about First Mining Gold briefly. We got, we're talking about all kinds of macro stuff, and we had some fun as well. But First Mining Gold's got a pretty incredible portfolio of assets. The Spring Pro project has, is got 5 million ounces of gold. It's currently being developed or permitted. We're expecting eventually it will get its permits to be a producing mine. It's got an NPV of $1 billion at 1350 gold, and of course gold's much higher today. So at current gold prices, I don't even know what the NPV would be, but it would be much higher than the $1 billion. The market cap of First Mining is only a little over 200 million. So in one asset alone, you've got 5 times value just to the current share price of First Mining Gold. Also, First Mining's got about over $100 million in marketable securities on its balance sheet, and these are deals it's done with other companies selling assets and doing joint ventures on assets. So go have a look. People listening today should go have a look to the website. They should look at the PowerPoint presentation and really learn about First Mining Gold, because it is highly undervalued, and I think it's kind of got lost for a variety of reasons, because the development, the curve of mining is, you got the exploration stage, which is the super exciting stage. Usually go up. Then you've got the permitting stage, which is the most boring stage, and that often can take a couple of years, and that's when the stock goes down, and it just kind of sits there. And then when you get your permit and you break ground on construction, that's when the stocks generally start to go higher again. And then of course, when you get into production and so on. So First Mining is kind of caught in that permitting period. So it's trading at quite low prices, in my opinion.
And you're the chairman of that company, right? And you helped founded it?
I did found it, and yes, I'm the chairman. It went public in 2015, and it had a market cap of 600 million when I took it first public. And today, as I said, it's like 200 million. So it's gone down a lot. It's kind of just stayed here. People should look at the stock chart. It's just it's been basically flat for this whole period. If you become an investor or shareholder of First Mining Gold, which I suggest people have a serious look at, you're going to get a 10% dividend in treasury metal shares. So hopefully that company continues to advance as well.
So give us your outlook on gold for 2021.
Always these short-term, time frames are always tough, right? Because you never know what's going to happen. Like Powell comes out and says something stupid, and gold's down bucks, and how do you predict that type of move, right? But the constant money printing, the constant debasement of currencies around the world, and the accumulation of debts that we're seeing, has to support gold, in my opinion. And why are several governments around the world buying gold? They're not. They're doing it for a reason. Central banks around the planet are adding to their gold reserves. And this has been going on for quite some time. So they know something's up, or they wouldn't be doing it. So I think that's a necessary trade, and something I am obviously quite close to. I think $3,000 gold's it could be 5,000, it could be 10,000, like some people say out there. But we don't need $10,000 gold, and at $10,000 gold, maybe the world's not going to be that great of a place either. So maybe we shouldn't be wishing for $10,000 gold. $3,000 gold will just do me just fine, and everyone will make a lot of money on their gold investments, and particularly the miners, because a good mining stock like First Mining Gold, or even like First Majestic, for example, they do outperform the metals, and it's quite measurable. a good mining stock should outperform the underlying metal by at least 200 to 300%.
So give us a wrap up on, one of the things you've said to me many times is, you want to help explain and teach people how to navigate through a bull market, because you said you do get these big pullbacks and these times where it doesn't move. And so to just kind of wrap up on that, why don't you just kind of lay down that that advice to an investor during in a volatile sector during this bull market? What do you want us to know in conclusion?
Don't be afraid to sell. Don't be afraid to take a profit. Don't wait for the top. You'll never get the top, and you'll never get the bottom either. So when you buy, expect to be wrong, and when you sell, expect to be wrong, because it's you're just not going to be able to time it. And Rick Rose on one of your recent interviews said that he was selling his uranium stocks a couple of months ago. He didn't get into a lot of detail. I don't know what percentage of his holdings he sold, but when I see big runs in the market, I do take money off the table, because I expect that these big runs they don't come all the time, and they only last for a month or two, or sometimes less, and then the stocks generally go back down to whatever new level, maybe the new trading level, but they do correct down again. And if you decide to buy back your position, you can do that if you wish, but just always make sure to sell stuff.
So First Mining Gold, we're trading on the OTC and in Canada.
Yeah, that's right. Yeah, it's I don't know what the OTC symbol is. Maybe you know it better than me, but it's F. I think I forget what it is.
We'll link all of that right there down below. We'll put the link to the calculator so you can check that out as well. I'll put the dates in the description as well for those that are interested in the about 10% dividend spinoff of Treasury Metals. I'll put all the dates and some of those other details right there down below that Keith let us know about. Make sure you hit the like button on this video to send it out into the YouTube universe so more people see this video. Comment down below, Keith rules. If you enjoyed today's episode, comment down below, Keith rules, or go gold go right there down below. Make sure you hit the subscribe, bell notification, all that fun stuff. Many of the large financial channels pay money to YouTube to get popped at the top of the algorithm. So one of the ways you could help us smaller folks compete is quite simply let YouTube know you enjoyed this video with a like, subscribe, comment, all right there down below. And we'll have First Mining Gold's info right there. And Keith, thank you so much for coming on.
Yeah, thanks, Jake. And those shareholders out there that will be owning or do currently own First Mining Gold, you look for those treasury shares to show up in your account in mid-July. And I would urge people to go to Treasury Metals website as well. The combined mine, the Goldland and Goliath combined project, has an endowment of around 3 million ounces of gold, and it's already permitted. And we didn't really get a lot into talking about why First Mining sold Goldland to Treasury Metals, because there is a reason for it. Obviously, we want that in production. The fact was that Goliath was already permitted, and it's fast tracks the whole project into production, which is pretty exciting. So, when you get those shares of Treasury Metals in your account, have a look at Treasury, because maybe it's an investment that you might want to hold on to.
Keith, thank you. And we'll be talking maybe at $3,000 gold.